So let's talk about the stock market, since that's probably why you are here today. Inflation is up, the stock market is down, and the world seems to move from one crisis to the next. A year ago, investing felt easy. 2022 is a very different story. Even big-name professional investors have experienced massive losses. The S&P 500 and other indices have erased much of the gains of the last few years and keeps falling. $9 trillion of wealth has been vaporized in the S&P 500 alone this year, more than in the Great Recession of 2008-2009. Markets up and down over 1% a day doesn't seem efficient or investable. And individual stocks have been hit far worse, with many of the 2020-2021 market darlings off 50, 60, 70, 80% or more off their highs. And the question on many of your minds, and why you're likely watching this webinar, is simply this: are you on the right path? Do you own the right investments for your situation? What is your investment strategy and process? Does it all make sense? These questions reveal your biggest fear. Are you going to have enough wealth to do what you want, when you want, and with whom you want in your lifetime? Because wealth isn't really about money. It's about freedom. Our biggest fear as we get older is never attaining or losing the freedom that we've worked hard our entire lives for. So let me ask you, do these questions keep you awake at night? Will you be able to maintain your standard of living in retirement? Will you have the freedom to work or not work on your schedule and terms? Will you be able to take the trips you've been dreaming of for years? Will you be able to spend the time you want with your partner, your children, and your grandchildren? Will you be able to help the people you love financially to make their lives a bit easier than yours was? Wealth gives you the freedom to live your life on your terms. Wealth gives you the power to say yes, and even more importantly, to say no. The stakes are huge. Your emotions are understandably high because the simple fact is that you only get one chance at life, only one chance to get this right. What's at stake is the difference between living the life that you want, the life you've worked so hard to attain, or serving someone else's dream because you didn't secure your financial freedom. I imagine you are attending this webinar today because you understand the stakes are high, as are your anxieties, and you're worried that you are on the wrong path, that your investment losses have given up most or all of the 2020-2021 gains, and maybe you are feeling lost and confused by what's happening in the markets. And if so, you are here for exactly the right reasons, and congratulations on taking such an important first step towards a better financial future. You recognize there is a problem, and you know the stakes are so high that you must fix it now. I'm sure many of you don't even want to open your brokerage statements. You know that you can't just close your eyes and ignore it, wishing and waiting for things to change, because hope is not an investment strategy. I want you to allow yourself to imagine for a minute with me. Close your eyes and picture how you would feel if you knew that you had a simple, common sense plan for your investments, tailored to your specific needs, managed by an experienced and highly qualified investor who communicates with you regularly to inform and educate you about your investments and your personal plan. Wouldn't that give you the confidence that you are on the right path to achieve your financial goals and realize the freedom you deserve? How would that newfound confidence feel today? Would it ease your anxiety and concern over the financial headlines? Would it give you peace of mind about your money today so that you can get back to focusing on your life, your work, and your family, and be fully present in the moment? And I'll tell you some good news about investing. Fortunes are built during recessions. The opportunity to acquire great businesses at attractive prices is foundational to the returns you will realize over time. Warren Buffett says, "Be fearful when others are greedy, and greedy when others are fearful." But far too many investors make decisions based on the emotions related to rising and falling prices and do the exact opposite a strategy doomed to failure. There is tremendous opportunity now to sort through the wreckage on Wall Street and identify great companies at attractive prices and put yourself on the path to low-risk, long-term wealth creation. Just like the farmer who plants seeds in the spring so he can reap the harvest in the fall, the seeds of future fortunes are sown during recessions. However, there's an important reason why the investment strategies that may have worked for you in recent years might not be successful going forward. The investment landscape has changed in ways that indicate that the next decade could be much more challenging for investors than the last. For the last 14 years, interest rates were held down near zero to help the global economy recover from the Great Recession. Low interest rates were a rising tide that lifted the value of many assets, including stocks and real estate. The easy availability of capital funded startups and expansion by established companies, creating millions of jobs. That paradigm has ended. The pandemic changed demand drastically and caused supply chain issues that have resulted in an increase in the rate of inflation of goods and services. As companies look to reduce costs or are no longer to secure necessary capital, jobs will be lost and businesses will close. Energy prices had been relatively low over the last decade as a shale dividend benefited consumers. Investors saw $300 billion in capital get destroyed over 15 years as shale companies increased production but could not generate profits. This amounted to a subsidy on energy prices that further benefited the economy. That paradigm has ended. High energy prices serve as an effective tax on economic activity. A world of higher interest rates, higher energy prices, and tighter capital markets is a very different world from the one we've lived in for the last 14 years. You might call it the Great Unwind, and the investment strategies that worked well in the recent past might greatly underperform in the future. Many of you are here today because you're concerned about your wealth and whether you are on the right path to securing your family's financial future. And I hope to leave you today with a better understanding of your options and hopefully give you some peace of mind in deciding what actions your family must take right now to preserve and grow your wealth. Before we go further, the lawyers want me to read this disclaimer. This webinar is for informational purposes and entertainment purposes only and does not constitute investment advice. I am an investment advisor, but I'm not your investment advisor and must issue this clarification to be compliant with securities regulations. If you are interested in booking a Zoom meeting to discuss your personal situation directly with me, click the Schedule a Call with Chris button. It will open a new window and you won't lose your place in this webinar. You can do that at any time. So, who am I and what does this have to do with you? I have worked in the investment management industry my entire career. I started out as a fund accountant before going to Yale for my MBA. There I met my mentor, David Swenson, who ran the Yale Endowment and was a leader in shaping how institutions invest. Leaving Yale, I polished my craft for a variety of prominent hedge funds, mutual funds, and investment advisors that provided world-class investment management services to institutions and the very wealthy. In helping family and friends invest, I noticed how lacking the investment options that were being offered to individuals, even wealthy ones, compared to what was available to those with significant wealth, meaning over 50 million. Furthermore, the knowledge of investments, including the differences between approaches and providers, was sorely lacking even among the wealthy and highly educated. I founded Aquitania Capital Management a decade ago with the intent to fill the gap of providing high-quality, unbiased investment management services to individuals and families that had accumulated significant wealth but were underserved by the options available to those less than ultra-wealthy. I have distilled my 25 years of professional investing into the all-weather portfolio strategy designed to preserve and grow your long-term wealth. It's a straightforward style of common sense investing that has been proven over time. It is simple to explain, but far from easy to accomplish. When Jeff Bezos, founder of Amazon, met Warren Buffett, Bezos asked a simple question. Warren, your investing style is so simple. Why doesn't everyone just copy you? Buffett replied, because nobody wants to get rich slow. I've spent over 25 years as a professional investor and have seen multiple cycles, and every generation has a hot sector, and there's always a fund manager that becomes a star and is viewed as a visionary until it all falls apart, leaving the investors like you with massive losses. Getting rich slowly is a perfectly acceptable outcome and far preferable to getting poor quickly. I have distilled my knowledge and experience into creating an all-weather portfolio to preserve and grow long-term wealth through rational, common sense, and time-tested investing principles. I call it the all-weather portfolio because to grow long-term wealth, you can't just grow your wealth in bull markets. You also must preserve your wealth in bear markets, like the one we're in right now. To do both requires investing using the principles of intelligent investing I discussed earlier, but also a careful approach to portfolio construction. You may have heard of a 60-40 portfolio. This refers to a portfolio comprised 60% in stocks and 40% in bonds. The general idea is that the stocks would provide growth in good markets and the bonds would preserve wealth in bear markets, like the one we're in right now. This reasonable strategy worked well until interest rates went to zero during the Great Recession. And the 60-40 portfolio is having its worst year ever, as rising interest rates have caused both stocks and bonds to fall sharply this year. Bonds have a place in managing your short-term wealth, money you need to consume in the next few years. But until high-quality bonds can offer attractive absolute yields, they serve no purpose in managing your long-term wealth, as low-yielding long-term bonds can only expose your portfolio to risk without providing an effective return. The all-weather portfolio is divided into three slices: compounders, opportunistic, and ballast. Many investors foolishly attempt to time the market or have a short-term mentality. My research process is focused on analyzing industries, businesses, and managements to identify long-term value creators and then purchasing their securities only when attractively priced. The all-weather portfolio looks very different from the S&P 500 and other portfolios. There are typically 30 to 50 stocks held, each one selected through rigorous, independent, fundamental research for their ability to preserve and grow long-term wealth. The S&P 500 contains only US-based companies, whereas the all-weather portfolio is global because there are great companies to be found all over the world to invest in. I would love to tell you all about the strategy and processes behind our all-weather portfolio, but I simply don't have the time in this presentation. If you're curious to learn more about the all-weather portfolio and how it's structured to build long-term wealth through good times and bad, please schedule a call with me at the end of this video. Now, I built Aquitania with one simple guiding principle: create a firm that I would love to be a client of. I think you will find us to be demonstrably superior and pleasantly different compared to most firms you have worked with or considered for the following reasons. First, we don't do stupid things with your money. Stocks are selected for your portfolio that I believe are right for you. Each position is backed by intensive, independent fundamental research. That doesn't mean that things will always turn out as we expect, but it means that we aren't buying for any reasons other than your direct benefit, such as to mimic an index. Two, we are an independent, registered investment advisor. We answer only to you. There is no corporate bureaucracy standing between me and you, and no corporate agenda that may not have your best interests in mind. Unlike all brokers and some wealth managers, we are fiduciaries, meaning that by law we must always act in your best interest. Transparency and access to the people making decisions about your portfolio. Relationships are built upon trust, and trust is built by performance and communication over time. I believe that the best clients are educated and informed about what they own and why, and we communicate this regularly and in detail through quarterly letters, emails, and video updates that you can peruse at your convenience. This helps build confidence in how your wealth is invested so that when the inevitable bear markets occur, you will be assured that we can navigate it successfully. In addition, I am available to take your questions directly at any time. This is access that most firms simply cannot provide, and others have account or relationship managers whose job is to manage you, but they aren't responsible for doing the underlying research into the stocks you own. Finally, we eat our own cooking. My family investments are invested with Aquitania, so that my interests align with yours. Investing is not a game of perfect, and I will make mistakes in buying companies where results fall short of my expectations. What I can guarantee is that mistakes will not occur because I'm not diligent in my work or my incentives are misaligned with yours. Owning the same stocks puts me in the same boat with you in good times and in bad. Portfolios designed just for you. Portfolios are constructed based on the best opportunities available at that time. If we purchased a great company in other accounts whose prices increase substantially, we may not decide to purchase it for a new account if we feel that better opportunities exist. In addition, all accounts are in your name as opposed to a mutual fund, so you own your tax basis and will not be hit with a tax bill for gains earned by other investors. In addition, we can accommodate your ethical and tax concerns. We will ask if there are any industries that you would not prefer not to be invested in, and we can work with you or your accountant at the end of the year if you need to realize or defer capital gains or losses for your tax planning. No conflicts of interest. The only fee that you will pay to Aquitania is our management fee, which is a simple percentage of your account's value. The value of that fee goes up and down with your portfolio, so our shared incentive is to grow your portfolio. Trade commissions are paid directly from your account to the custodial brokerage where your assets are held in your name. And we do not receive any kickbacks from any brokerage firm, nor do we earn any commissions for selling products, because we don't sell any products. There are no fees to open or close an account, and you can terminate your relationship with us at any time without penalty. We never buy or sell stocks in our personal accounts ahead of our clients. Our incentives are to grow our clients' wealth and to delight them with incredible service to retain their business. If you are interested in booking a Zoom meeting to discuss your personal situation directly with me, click the Schedule a Call with Chris button. It will open a new window and you won't lose your place in this webinar. Before we go any further, I want to make sure that you're not wasting your time. There are lots of different firms that offer investment services, and I want you to find the firm that is right for you, even if it isn't mine. Because we are talking about building and growing a relationship that hopefully spans many years, even decades, and whether in business or in life, relationships when you're just not right for each other are no fun at all. My firm is a specialist investment boutique, and I'm not trying to deliver all things to all people. I'm only looking to help my clients invest the portion of their wealth dedicated for long-term growth. This means that portion of your money that you don't need to spend for at least 5 years, and ideally 10 to 20 years or more. Typical clients are working professionals and business owners in their 40s and 50s. We help tech workers looking to diversify away some of their company's stock risk while still investing for long-term growth. We also work with individuals nearing or in retirement who have accumulated generational wealth and are looking to invest their long-term capital to preserve and grow wealth for their heirs. I emphasize communicating with and educating our clients. This starts with making a personalized assessment of your goals, your risk tolerance, and any other preferences at the onset of the relationship. We are limited to the number of clients we can bring on in any year. We generally only work with clients that have $500,000 or more to invest. However, I recognize that 2022 has been a tough year for investors, and that's probably why you're here. You may have had $500,000 or more last year that's fallen this year and you're a bit under our minimums. I would suggest that you stay on this webinar, and if you're interested in working with us, I will try and be as accommodating as possible on a case-by-case basis. We are not designed to appeal to everyone, but we are the firm that you need if you're looking for a low-risk, intelligent investing oriented towards long-term growth, research-based global stock selection, full transparency about what your portfolio contains and why, custom-tailored portfolio and client experience, direct line of communication with decision makers, no conflicts of interest, and a manager who owns the same stocks as you. Here's some more detail on what working with us looks like. We don't custody your assets. They are in accounts under your name with interactive brokers. You have access to those accounts directly. Our investment management agreement gives us only a limited power of attorney to enter buy and sell orders and debit your accounts for our fee. We cannot disperse funds. Clients must invest a minimum of $500,000, which can be separated into multiple accounts of at least $100,000 each. Given the sharp decline in the stock market this year, please reach out if you are near these minimums but have fallen short because of losses. We may be able to make an accommodation on a case-by-case basis. Our fees are 1.5% of assets, payable monthly on a prorated basis in arrears. We debit your account 1/8% of assets on the first business day of the month, based on your balance on the last trading day of the prior month. There are many options available to investors at fees higher and lower than ours. I believe that our fees offer tremendous value given our research-intensive investment approach and exceptional level of client service and access. We earn our fees in ways you will love. As an independent boutique firm, you will never be just a number with us, and we will give you the attention you deserve. Many investors who don't have the time or the interest to invest choose index funds. Index funds are an effective solution in many situations. However, there is a big reason to be skeptical that the performance of index funds going forward will be as good as it was over the last decade. Index funds benefited greatly when interest rates fell to zero, 14 years ago during the Great Recession. A rising tide lifts all boats. This period of financial history is over. Interest rates have risen sharply in 2022 and are likely to climb higher, causing investors to be more discerning between companies that are generating cash flow today and those that only trade on their potential for future growth. The tide is going out and opportunities abound to invest in ways unavailable to index funds. Albert Einstein famously said, "We cannot solve our problems with the same level of thinking we used when we created them." There's a problem that needs to be addressed now regarding how your money is being invested to preserve and grow your long-term wealth. And I recognize that change is scary and that it's too easy to just put your head in the sand and ignore it, hoping the market recovers and you regain some of the capital you had 3, 6, 9 months ago. But hope is not a strategy. The stakes are exceptionally high, and you only get one chance to build the wealth that can give you the freedom to live the life you want. Nothing changes if nothing changes. So you must change the path you're on, the path that isn't working. Someone is sitting under a shade tree because someone planted one 20 years ago. The best time to start investing intelligently was 20 years ago. The second best time is today. I have told you about an intelligent, common sense investing strategy that has been proven over time and has created great fortunes. It's simple, but it is not easy. If you don't have the time or the expertise to invest for yourself, you need an expert to guide you. And I have a 25-year track record of building long-term wealth for large institutions and the ultra-wealthy using strategies that form the basis for our all-weather portfolio that is designed for families like yours. You know that who you work with is a vitally important choice. I have built my firm with an investor's first ethos, free of conflicts, and designed to delight you with our investing and our service. You know that working with an investor who owns the same stocks as you align your interests. Warren Buffett has discussed how people either instantly connect with the principles of intelligent investing or they don't. Most people, by definition, just don't get it. They would rather chase the latest fad and invest haphazardly or just resign themselves to a cookie-cutter index fund portfolio. My intention and purpose are to delight each client with our long-term performance and outstanding service. It only makes sense to become a client if what I've said today instantly resonated with you and you share my commitment to intelligent investing for long-term wealth creation. Consider the following questions to decide if working with us is the right choice for you. Are you seeking a low-risk, intelligent investing strategy oriented towards long-term growth? Would you love full transparency about what companies your portfolio owns and why? Do you deserve a custom-tailored portfolio and client experience? Would you appreciate a direct line of communication with the decision maker on your portfolio? Would you feel secure in working with a firm that does not have conflicts of interest in how they manage your wealth? Would you feel reassurance knowing that your investment manager owns the same stocks they purchased for you? So, if you are ready to make a change and put your family on the path to low risk, long-term wealth creation, want to work with an investment manager that puts your needs first, and you meet our minimums, please check the button to schedule a phone or Zoom meeting with me to bring you on board.